Good afternoon, everyone. I am going to start out and with the presentation, and then Catherine's going to finish us off. So there we have a lot of information, and we could have kept going for a lot more slides today. So if you, as Adam said, if you have any questions or want to talk further on the topic, we are happy to give you more of our time to answer questions. So you can just put with us after as needed. If I can get there we go. Okay, the topic today, number one, what is an audit? Number two, does my organization need an audit? How do I prepare for an audit? And then best practices and tools for a successful audit. First question is, what is an audit? You usually hear the word audit around funding. You'll get a request from a funder that you need an audit. But what does that really mean? Do they really know what it means? But an audit is a true examination of the financial records, accounts, business transactions, accounting practices, and internal controls of a charitable nonprofit by an independent auditor. Sometimes people get audits confused because you could have an audit from the IRS, and there are audits maybe from the state of Kansas or state of Missouri coming in and auditing funding. But the audit we're talking about today is the examination of your financial statements and everything that goes along with getting those financial statements prepared and put out into the world. When they talk about independent, what does that mean? It means that the auditor, the CPA, is not an employee of the nonprofit, but instead is retained through a contract for services and hence is independent. Now, Support Kansas City is a contract for services that organizations have, you have a contract with us to pay us to do accounting, but we are not auditors. We are bookkeepers. We will do some consulting, but we are not auditors. We have a lot of people ask if we can perform audits, but we are not auditors. So it needs to be a CPA firm that performs that audit. When the auditor begins their services, what they're looking to audit is a full set of financial reports prepared by the organization. The auditor is not the one preparing reports. So a lot of times it's very stressful to have an auditor come in because they want a perfect set of financial reports to audit. And in a perfect world, not only would you hand them the financial statements, but you would also hand them the footnotes that go along with the audit. But many auditors understand that that is something that they will give you a template for, or they will gather the information for to put together an audited set of financials. But that's why if you've gone through an audit before and the auditor has to make adjustments to your accounting, because things aren't completely closed out or there's some changes, it can be very frustrating. And when they have a lot of adjustments to the trial balance that you give them, for lack of a better explanation, nobody's happy, right? So our goal is always a clean audit of no adjustments or a minimal amount of adjustments to the financial reports that you give to the auditor. When we talk about audit testing, so you contract with an auditor, they show up to your organization, they set up their computers. What are they going to do? Or now in the new virtual world, a lot of auditors are doing virtual audits. That can be better or that can be harder because sometimes that virtual stretches it out. In the old days, auditors would come, they would bring their computers, they'd sit in your office for a week or 3 or 4 days, What are they doing when they are sitting in front of their computers? They've got your financial information. One thing they're doing is they're performing some analytical procedures. They like to look at your trending. Are there variances from year to year? The auditor will ask for your budget. And so they're going to see how far you are off from budget and ask you questions. So there's a lot of explanation, and that's why it's really important to really understand your financials and your variances. It's important to have a budget so that you can explain why things are happening. So you're telling your story through numbers, and the analytical procedures are just a little deeper dive to explain changes in trends or changes from budget. Control testing, that's something that it's not the numbers, but it's the process that gets to the numbers. So it's really the internal control. Is there risk that something may be missed? A lot of what auditors do is they look for the completeness of a transaction. Did you miss recording a grant in the right year because you didn't have a process in place to capture and record the grant? Who opens the mail? Is there a lack of a segregation of duties? And they're looking at processes in addition to looking at the balances of numbers. And number 3, substantive testing. The numbers that you have, how did you get those numbers? Do you have backup documentation for the information that you have given the auditor? So for example, fixed assets. Do you have a depreciation schedule? If you bought 5 computers, do you have the invoices for those computers? So they'll go through your financials and your general ledger, and they'll ask for a ton of things. They will ask for support for deposits. We're actually having some preliminary work done for our audit this month, and they've already asked for backup documentation for certain deposits that we have made throughout 2022. So they're looking to see that our backup documentation matches what we recorded in our financial system. What's the whole goal of having an audit? Well, the goal really is to have an audit report from the auditor that says, we've done all this work, those items we just talked about, and everything looks good, that we have confidence that the numbers that are reported on the financials are materially correct, that there is not such a big swing or a change that we noticed that would cause the reader of the financial statement to not be able to make an informed decision about the health of the organization. So that's why you want an unqualified opinion. Like we have no reservations about these financials is what you're looking for. A qualified opinion, which there's a cover page on the financials, that's the audit report. The qualified would say, we went through all this testing and we just found a lot of inconsistencies and things that weren't recorded correctly. And so we can't be sure that the financial statements are correct. And you really don't want that qualified opinion. I would say it's not the end of the universe if you get one, but it sure is a sign that you need to firm up your processes and have lots of good discussion about how to get to an unqualified report. The auditors talk about in that audit report, the basis for their opinion, meaning why did we make the decision we made? And we can provide with the materials kind of a sample audit report. That's something that we can provide to you. If you've had an audit, You've seen it. You really go, they've changed it in the past year. They're always changing, like adding paragraphs. And one of the ones they say a lot is, it is an opinion about, it represents materially the position of the organization. But they also kind of say what it doesn't do. The audit report doesn't say that they're going to catch fraud or things like that. So it's just important to understand and have the auditor walk through the report. They will typically walk through the audit report with you. They talk about the management responsibility. As I talked about before, management's responsibility is to prepare the financial statements. The auditor's responsibility is to do testing to ensure that the numbers are correct and that you're reporting everything in accordance with generally accepted accounting procedures and kind of checking off their list. Another item that comes along with, you get a packet when you get your audit. So you'll get a PDF of the audit letter and the financial statements and the notes to the financial statements. And then you'll also get a management letter. And this is a letter from the auditors kind of giving you a little more information about what they found when they were doing the audit. A lot of times, boards and management with an organization, this is a really scary letter because it's telling you all the things that you didn't do great or areas that maybe you have no control over because you're a small organization. So, for example, talking about deficiency in internal control. Sometimes we would always get in our management letter that we don't have enough, people at the front desk opening the mail and observing the mail to have the best separation of duties. So you can really take this management letter and review what the auditor has to say when you're planning for your next year about how to kind of firm up or, just make your processes better. That's what this letter is for. So it's going to talk about matters identified in an audit. There's a lot of words that are very specific to the auditor as terminology, like the word deficiency in internal control. The design of it versus the operation, right? So you can have all the procedures in the world written down, but if someone doesn't follow them, that the auditor would probably point that out. If there's a material weakness, meaning there's levels of kind of extreme. So there's a deficiency, a material weakness, and a significant deficiency. So you really don't want that significant deficiency to come up in the management letter. So that's where you can really look at, if you have a deficiency, it's probably like, well, I can't do anything about it. I only have 3 people on staff, so I'm not going to hire a 4th just to open the mail. But a significant deficiency is something that it's really going to impact the audit, and it more than likely will get you to that audit opinion that you don't want, that qualified audit opinion. And again, we could probably find an example of a management letter that you could see that had some references to some of this terminology. A lot of questions that we get are, do I need an audit? And not all organizations are required to have an audit. Most of the questions arise when a funder is asking. And do remember that you need to plan ahead for an audit. If you are trying to get funding, you've never had an audit, and it says that you must have an audit, it is very difficult to get an audit completed by the time you're going to complete that grant application. So a lot of times you can meet with an audit firm and kind of talk through, and they're going to do this consultation for free. Are you ready for an audit? Is it worth doing an audit? And maybe there's some alternative to an audit, and we'll talk about that a little bit as well. There are some times when you must have an audit. There are many federal, state, and local governments that request a copy of the audited financial statements. If you have more than $750,000 in federal funds spending, there's special audit requirements. So not only must you have an audit, there are additional audit procedures that have to happen in relation to those federal funds. Some contracts with state and local governments require an independent audit. And then this is one that it's sometimes flies under the radar, but when you're soliciting funds in multiple states, it's a state-by-state basis. To register for solicitation of funds, you may be required to submit a copy of your audit. We talked about funders. Sometimes if it's a foundation and you're a small organization, you may be able to submit a copy of your, you might be able to submit maybe a copy of your 990. Some of the funders might say, how about a review or a compilation, which is also performed by a CPA firm, but it's not to the extent of an audit. So sometimes it's a bit less expensive than a full audit. Banks, if you have loans. So there are just a lot of different examples here of when you might have an audit be requested from an outside source. And again, plan ahead if you hear the word audit and see cost, is it truly required, and what the time lag would be between the decision-making time that you need an audit and when they can actually perform an audit. So we're going to talk about preparing for an audit, and these are just items having gone through audits and listening to feedback from our clients, what they do to prepare for an audit. So for example, our audit usually happens in April or May. Gives us time to close the year, make sure we have a good cutoff. But there's a lot of things that we're doing right now and have been doing throughout the year to hopefully make it as painless as possible when the auditors start their field work. So the engagement letter is one of the first things the auditor will send you, and it will talk a lot. You'll read through it, and it will talk about expectations from what the auditors are going to do, what we're responsible for. It will talk, the fees will be listed out in that engagement, and they'll outline the start date and completion date for the audit. One of the things that we do at Support Kansas City for our own audit is we really work, we have our time period as far as the auditor comes in April, and that's really for a specific purpose, because we want that audit to be delivered and finalized by like the September board meeting. And so we will take our board meeting dates throughout the year, and we'll be like, okay, when does the board meet? Okay, they meet in September. When does the finance committee meet? They meet in August. Okay, that means we have to start the field work in April or May. And that gives us X amount of time to review it and to bring it back if there are any changes, so that we're kind of working backwards. There's a real strategy about when we have the audit. So I think that that's a really important thing for an organization, is to plan your audit early, and being prepared for that. And when the finance committee or when the board's going to review it, to give both the organization and the auditors time to address any complications that arise, or questions or concerns. There's a lot of documents. If you've ever been through an audit, they're going to give you a huge list of things that you need. So gather it in advance, so that, and it's even outside of financial information. So strategic plan documents, new programs that you start. We had to send our org chart the other day for preliminary work. So management turnover, lists of employees, documentation, federal and state grants. They want to see the award letters. They want to see all the documents, investments, lawsuits, documents like bylaws, board meeting minutes. We just sent over all our 2022 board meeting minutes to date, new leases, grant agreements. So these are things that anytime something new happens, make a document, and we'll talk about this in a little bit. Create a folder, call it 2022 audit, and start putting all the information in. Even if you have it in another folder or another file, make a copy, put a copy into that audit folder so that it's there later and you don't have to do all the work in April or whenever your audit field work happens. I think this is probably the hardest piece of preparing for an audit, is documenting your internal controls. You are very busy just trying to get through each day and deliver your services and do your programming. And then you have to work with Support Kansas City and give us information to get your financials out for your board meetings. You have to document internal controls. And even if Support Kansas City is helping with the accounting, there are still items on your side that you have to document and make sure they're the most efficient they can be. So who opens the mail? Who provides Support Kansas City with the backup? Who reviews the financial statements? Who reviews the bank reconciliations? And these need to all be written down, and you kind of have to troubleshoot, like, is this as solid as it possibly could be? So wait a minute, the same person that's making the bank deposits opening the mail. Okay, we've got it written down, that's great, but what could go wrong here? Well, wait a minute, that person could have cash in the mail, or they could deposit a check to their own account. So you kind of review those major transaction cycles and internal controls to not only appease the auditor, but to make sure that you're looking at your own process to see if it's the most efficient and the most solid process that you can have. So the format in which you document this can take on a lot of different things. It can be a matrix, a flow chart, a narrative, a checklist. Sometimes the auditors ask us, they will send us a lot of Excel documents that we fill out that are kind of preset, and ask us a question about our process. And then we also provide them with a narrative of, how we do our billing, which is a big part of what Support Kansas City does, is we do work for clients and then we bill clients. And so we need that written down. How do we pay our bills? What systems do we use? Who does that? Again, at the end of the day, when you have zero time left in the day, it always feels like this is the last thing that gets paid attention to, but it is really important to document. And not only to document, but to review and update, because you can pull out your internal control document and it can be really out of date, and all the people have left and all the positions have changed. So it's very important to keep it updated and fresh. We help a lot of organizations do monthly, quarterly, and annual close. But we still, at Support Kansas City, you may think, oh my gosh, well, they do it. We got this. There's still a lot of information beyond just the management reports that would need to be provided to the auditor. So different audit schedules, we might talk a little bit more about that. Fixed asset schedule is a very good example. Roll forward of grants and what dollar amounts are left to be spent on grants, those type of things. If you can keep up with them each month, it makes the audit easier. And it's also great to be able to meet with us maybe on a quarterly basis to review these things as well, so that you can identify any issues that you might have in an audit. Gathering third-party reports and statements, getting those investment statements, getting the gain-loss statements, getting all the bank reconciliations together, so that you can push them over to the auditor when you begin the audit. And then documenting unusual transactions. I would say like a PPP loan might have been a great example of an unusual transaction. So gathering all the documents, the approval, the forgiveness, the dates, all the documentation together for that unusual transaction. We put review prior year audit as part of preparing for an audit. It's a good time to dust off the audit and look at the audit and the management letter to see what adjusting journal entries the auditor proposed or made in the prior year, so that you can make those before the audit, and just review, do you have everything gathered that would substantiate the numbers of the audit? Like, oh yeah, we have to do the footnote about investments. So we've got to get these 3 additional documents so that we get the numbers. So here's a sample close process list. Many of these things are hit upon by Support Kansas City when they're assisting with the bookkeeping, but a lot of them, because a month can go by so quickly, and if we're preparing 12 management reports, we may only make some adjustments annually. So it's really important to spend a little extra time with Support Kansas City at the end of the year or quarterly to make sure that these things are being addressed. So balance sheet accounts, making sure that everything has supporting documentation, significant contributions, payroll expenses. Quarterly, you can look and see, have people pledged money that we don't have recorded? Are we truly spending down all our grant funding? Some payroll reconciliations are really important on a regular basis. And then some things that you may only do at year end, looking at bad debt allowance if you have a capital campaign, lease obligations. There's some additional year end generally accepted accounting principle items that you have to do for lease obligations, endowment distribution calculations. Sometimes those functional expenses are done once a year or on maybe a quarterly basis rather than monthly. So these are just some items that you have to be aware of to do before the audit can take place. So there's also some estimates of depreciation, prepaid expenses, investment values, in-kind revenue and expense. And all this might be like, I have no idea what you're talking about, Christy. That's why we use Support Kansas City. And that's exactly right. Like, you need to be able to talk to us about this. But you need to be aware that the conversation needs to happen and that you need to be ready for that conversation so that you can say, the audit is coming up. I know we need to do something around prepaid expenses. And once you have that process down, you'll be able to go, I know every year, prepaid expenses, we have to look at insurance. I know that. Support Kansas City knows that. We've got it covered. Same thing with in-kind revenue and expense. As long as you know the items that you need to be paying attention to, we can help you with the details of preparing for an audit. And number 6 here, working with the auditor. Sometimes this is a struggle, kind of depends on your auditor. And I think with virtual audits, it makes it a little harder as well. When they used to be on site, you could spend a lot more time building that relationship and talking to them. But if they're just one virtual meeting a week, or maybe 1 hour the whole time they're working on the audit, well, that means they don't really know a lot about you. They're just looking at the numbers and all the stuff you've uploaded to the portal. So working with the auditor, building a relationship, making a plan, field work dates, deadlines, who's going to do what, making sure that they set time to talk with you or Support Kansas City to clarify any questions that they have, because you know your organization better than they know your organization. So they really need to be able to talk with you and understand what you do and how you do it. And allow time for internal review. Really important. It's your audit. Auditors, again, it's not that they're making mistakes, but again, you might say, well, no, that doesn't represent what we're actually doing. So you might need to change numbers, you might need to change descriptions on footnotes or things like that to really use that audit as a document to brag about your organization and report the health of your organization. And with all of that background, Catherine's now going to talk about some of the best practices and tools for having a successful audit.
All right. And some of this was mentioned previously, but it's good to emphasize it again. The first one here is create an audit folder at the beginning of the year. And then throughout the year, you can gather copies of documents, your board meeting minutes, any bylaw changes, changes to your strategic plan, any of that, you can start gathering those copies in a separate audit folder so that at the time the auditors want to meet, you already have a lot of that gathered. It reduces stress through that audit process. You don't have to go back and think, now what did we do all year long? You'll already have it in your separate audit folder. And you can send those documents to the auditors at the planning or pre-planning meetings to get a jump start on things. And then your internal control worksheet or document, keep that updated throughout the year. As you have employees leave and you're looking at maybe realigning the duties of each position or how things are going to be done, and you update that in your internal control document, then it keeps it fresh and it doesn't get outdated. If you're changing softwares, maybe you're changing your database from one system to another, how is that going to affect your internal controls? Is it now going to sync with your accounting system and it didn't before? Documenting those kinds of changes. Okay, then also related to your internal controls, what kind of audit trails can you get out of your software? I know a lot of our clients use QuickBooks, and QuickBooks has an audit trail. You can see who posted a transaction and who maybe changed it 6 months later if it was found that it needed some kind of update. So you can have those kinds of reports to kind of shore up your accounting. And you can also document your reviews if auditors have pointed out that your bank reconciliations should be reviewed by someone who didn't prepare them, so that anything might jump out as being odd or unusual, then it would get caught earlier on than at the end of the year. So who's reviewing them? Are they signing off on the document that they've reviewed it? And communicate throughout the year with the auditor. If a question comes up about how you're recording something or you're doing something for the first time and you want to make sure you get it correctly set up in your system, you ask the auditor. They're available throughout the year, not just during the actual audit. So you can keep in communication with them, learn as you go. We have clients that might be taking on a new program and want to make sure that they're recording and capturing all the information that they need to then have a smooth audit later on. But keep in communication throughout the year with the auditor. And then the audit plan is built around what we usually call the PBC list, or the prepared by client. These are items that the auditor is going to give you a list at the beginning of the audit and say they need these 50 documents from you. That's the PBC list. And you can, if you don't have a list for the current year, you can refer to the prior year. They don't usually change a lot. Some things may be added or removed as things change, but it's a core document that you can refer to from year to year. And it's good that as you gather those documents, if you number them or name them the same way that the list is written by the auditor, then it's easier to check off. Yes, I have that document or that invoice or whatever they're asking for, if the files are named and organized in the same way. And then plan staff time for pulling audit selections. If they're going to give you a list of 20 deposits, make sure you have staff available to do that. Some of our clients use bill.com and have given the auditor access into that system so they can go in there and see the invoices and see the payments and who authorized them, rather than you having to pull all that documentation. It makes it a little less stressful and easier on the staff, that they're not having to spend that time on those items. And then if you are implementing any new software for your database, your accounting system, if you have any budgeting software that syncs with the system, or payroll, if you're changing anything, then go back and review what kind of reports do you need to pull, what kind of documentation on how it syncs with the system, that something in bill.com is matching a payment with accounts payable and it's matching it with specific expense accounts, just so that you're familiar with that, because the auditor is likely going to raise questions about any new software and how you've got it set up and how it's functioning. And then also you can audit yourself. Don't wait to the end of the year. You can review more in depth every quarter what your balance sheet items are. Do they look reasonable? Maybe look at the detail on any specific account that has been selected in the past. Do you have procedures and documentation for your thresholds on your capitalization for your fixed assets? Your fraud risk assessment, what was an issue last year? What has been done to mitigate any challenges in separation of duties or any other area? And just kind of keep that up throughout the year on a quarterly, semi-annual basis, so that you don't have to go back and think about the entire year during the audit. You've already got that documented. And then utilize Support Kansas City. I mean, we're part of the process. We can function best if we're included in meetings with the auditor, that we know when your field work is going to start, so that we can make sure everything is reviewed. We've got any year-end accruals in, any looking at fixed asset disposals or any additions that everything is complete and accurate, so that when field work does begin, we're handing over good documents for the auditor. And then after the audit is done, if you're in conversations about any specific area, maybe your pledges or some other area needed more discussion in a particular year, include us in those meetings, and then we can build out work papers. We can make sure that we've reviewed things to the detail that the auditors need, so that we're not trying to catch up after the fact and make sure that everything is in place. If we're involved up front and in every step of the process, maybe not every single meeting, but just kind of let us know how things are going and what new items the auditors might be asking for, that will help throughout the audit. And then this final one, to be aware of accounting standards. There have been some recent issuances of accounting standards in the revenue recognition area, and in leases, and in recording in-kind contributions that affect the financial statements, whether it's how you actually record the transactions or more disclosures and footnotes. I know leases is recording additional items on a balance sheet in most cases. So be aware of what's going on, and if we don't bring it up and you hear about it, let us know, and we can answer and address those questions. And we'll be on top of the audit and be able to move smoothly through the process.